Welcome back. As promised, we're now going to speak to Motilal Oswal. Bumper mark-to-market gains make a flat quarter operationally look exceptional for Motilal Oswal. The problem child home finance is still in the green, but the stress cannot be ignored. Lower cost of funds is a boon for now. Raamdeo Agrawal, the chairman of Motilal Oswal Financial Services, joins us now to talk about that. Mr. Agrawal, good morning and thanks so much for joining us. You know, I just want to talk a little bit about the numbers. You have seen very strong mark-to-market gains in this quarter. Can you tell us how business has been overall and what is the expectation as we head into the next couple of quarters?
Good morning, Sonia, and good morning, viewers. So we are very pleased to announce our Q3 numbers. And there are 2-3 highlights. One is, of course, about the broking. You know, broking has actually seen a massive, what we call growth in terms of number of clients addition. I think last quarter itself has seen almost 2 lakh new clients adding up. And our client additions are not, we are very choosy about who should be our client. So it's a full service brokerage. So almost 70,000-80,000 clients in December itself. So I think somewhere the KYC, ease of KYC, where you can do it in 10-15 minutes. So that has really brought a lot of masses into the broking. And that has changed, I believe, almost 60 lakh new clients have been added in last 9 months in the industry. So that we have also kept pace. And the client addition has been very high. Our brokers addition has been very high. So we are investing very strongly into that business, and that is keeping our profit growth in that particular business at a still 50-60%. It could have been much better if we had not invested into hiring new brokers. I think some 1,200 to 1,300 people have been hired in last 4-5 months in broking. So that has been the highlight of this particular quarter. And second is about the housing finance, where the stress, I hope this is the last quarter of extraordinary stress when the moratorium has ended and we have recognized everything. And but I think the RBI's proactive action of keeping the liquidity, ample liquidity, and the cost of liquidity being low, that has provided a lot of cushion. And that's why if you look at the pre-provisioning profit, there is a hefty jump in the pre-provisioning profit. Just that the provisions have eaten away the entire thing. And so the business conditions have been stable. The stress assets of 9 months have been whatever is to be recognized, that has been done. And we hope our collection ratios has come to 94%, which is as good as pre-COVID, and it is improving by the week. So we think that in next 2-3 quarters, probably we will be through the hump.
Raamdeo, good morning and thank you for joining us. You are best placed to talk about stress. Speak to us about your own stress. It's gone up by about 1.3 percentage points. And also how you also observe other finance companies whose shares you buy, banks and non-banks. How serious is this stress? It's very confusing. The RBI says it could go to 13.5. Most of the others, big banks are guiding for lower NPAs. How serious is the stress in the financial system?
Yeah, see, the stress is there for sure. I mean, ours is a completely collateralized, 10 lakhs per ticket kind of lending. And still it is there in the sense that money is not coming because the collateral is there, but the people have lost jobs or they have other priorities. So they are not able to pay. Clearly they want to pay, but they are not able to pay because income levels have gone down. So I think stress must be there in every place, but how do you manage the book? That is the key issue. We have only one segment, that is the retail. But banks and all, they have the large corporates, then they have the mid MSME. So their government has come out with a lot of this guarantee schemes, the 20 lakh crore scheme. There I think a lot of cleaning up has happened, or they have been able to restructure the loans or refresh the loans in such a way that at least currently that stress is not visible. Maybe after 12 months or 18 months, if the economy doesn't recover, then clearly it will come to haunt. But today, the problem is clearly postponed for them. That's my sense. But at a lower end, particularly the completely lower end where 10-15 lakhs ticket size is there, we clearly see stress still continuing. Though it is elevating, week by week, but in last 9 months, it was clearly visible.
Raamdeo, good morning. In our last interaction, we kept our word and didn't ask you anything on market. But this time, of course, we are not going to, let you go away without answering something on market. You spoke about the economy and the fact that, it's, of course, showing some recovery, but there's a risk whether the recovery sustains or not. What have you made of the earnings season so far, Raamdeo? And do you think the market at current level is justified looking at the kind of earnings that we have had?
See, some of the positive surprises, particularly in automotive side and the tech side, and so even some of the bigger banks also have been better than what we thought in terms of stress level. So there are a lot of bright spots. I mean, this is how the earnings explode in the sense that the first signs of build-up of the earnings momentum, which we lost it for last 5-6 years, that is clearly visible. And the best of the economy is yet ahead in the sense that for next 2 years, economy is expected to grow at like next 12 months. It is let's not talk about more than 12 months. We talk about 11. Even now, IMF is saying, which is most conservative, at about 11.5%. That's a staggering, historical number. So nominal GDP growth will be more like 16%, 17%, and the tax buoyancy will be more like 1.2, 1.3. So the tax collection could be anywhere upwards of 20-25%. So government should be sitting on. Government should have problem of plenty in terms of how do they spend their resources. So I think it's going to be a very interesting time, and the competition is weak in every segment. So I think this is the most conducive environment for successful companies to build earnings, and that's what is visible clearly in terms of margin expansion and on a very single-digit kind of a top-line growth. We are seeing margin expansion of 300, 400 basis points. So I think that is very interesting. Let's see how we build in the March quarter and quarters after that.
Okay, so since we are talking about this recovery in earnings, it really stands out, Raamdeo, in the auto space, and this is a sector that you've tracked for decades now. What do you see? What's the most prudent thing to do? Because, these are stocks that have already rallied 100% from the March lows. Do you think that it's just the start of a cyclical upturn, or has this story played out for now?
I'm clearly surprised. Personally, I'm also surprised by the margin expansion, particularly led by Bajaj Auto, and yesterday I think TVS Motors also. So clearly it is widespread, and volume. The best of the volume is yet ahead because the low interest rate is yet to full play. Low interest rate, full opening up of the economy, and a lot of liquidity. These are all going to play out, and then pent up demand, because nobody, whosoever wants to buy automotive, whether it is 4-wheeler, 3-wheeler, they can postpone it, but they have to buy. And probably now post-COVID, people are more conscious of buying automotive. And third thing is that there is no more competition. I don't think any company from anywhere in the world is thinking of setting up a shop in India, except for electric vehicles. So the conventional companies will have a completely open, terrain. They have to fight themselves. But I think competition will be limited. Demand will be exploding. Should be at whatever level they want to peg, in the sense that they want to profiteer, they can. But I think in all wisdom, they should contain the margin at some level and go for the volume growth rather than go for the margin maximization. That would be my.
Okay. Raamdeo, the markets have been charitable perhaps and given an 8% dip. Is that good enough for increasing the shopping?
I didn't get that. What
No, when you start buying more because the market has given you this unexpected 8% dip.
Yeah, see, it is not about... this gives opportunity to buy some of the stocks of which result we have seen, and we didn't have enough of it. Or, earlier it was every day it was higher, so it was making it a little uncomfortable. But now the same stocks are 5 to 10% cheaper. So clearly it is the time to refill or readjust your portfolios, or maybe allocate a little more into equities. So clearly it makes life easier to build a portfolio.
Okay, I just had one more question, on the financials of Motilal Oswal. In the housing finance segment particularly, I know we spoke about it, but I was going through your presentation, and in that you say that there is traction picking up in terms of collection efficiency, and the net interest margins have also expanded by 120 basis points year on year. What do you see as the trajectory for the home finance business, both in terms of growth, collection efficiency and margins?
Yeah, so clearly this Q4 we have a new team led by Arvind. So he is going to be leading the pack, and we have seen worst of the stress assets. We think that we have seen the worst of it, and we have provided for everything very transparently. So now here it is, we have to build the book, and the sales engine has to be fired up in Q4. Now, how successful we are in next 4 quarters or 5 quarters to build a book and collect, what stress assets are there, because they're all collateral. We have about 1,400 to 1,500 houses under acquisition. So all those houses have to be liquidated. So those are the things which are going to be important. And once we are able to collect, once our collection engine fires up and actually disbursal picks up to a level where the book stops degrowing. Right now, our collections are more than what we are lending. So that has to reverse probably in the Q1 of next year. And so 21-22 should be the year of stabilization to some amount of growth, maybe 5. Corporate plan is for 10-50% growth. But even if we are able to first attempt to stabilize, and then of course back-ended grow it at whatever pace. But these are all still. I only hope there is no further disruption in the economy, because this is a segment which is most vulnerable to first demonetization and now COVID. Now we have come out of these 2 shocks, and I hope there is no disruption further in next 12 to 18 months, because it's just about limping back. And then I think in next 4 quarters we should be able to say we are over the hump.
Now, Raamdeo, one last point. Given the current run in the market and on this your QGLP model, P would be a problem, right? Would you be buying, for example, of the good stocks that you have in your portfolio at current prices?
Yes, see, it all depends on what's your view on the growth and what actually materializes. I may have a growth projection of, say, large IT company at about 20%. But at 20%, 30-32 P is not bad. That's a reasonable valuation for a very large, globally acclaimed, largest company in the world. But the issue is whether it comes to 20%, it comes to 25-30%, or it comes to 10-12%. That delivery, nobody has a fix. Probably the company guys will be knowing. Order booking is continuously building up quarter after quarter. In fact, the best of the sales quarter could be the Jan, Feb, March on the back of last 3 quarters of build-up of order book. I think now the execution engine has to fire up, and we are hearing the recruitment numbers of 25,000, 30,000, 40,000 by single companies in next 12 months. So this is a new dialogue we are hearing after almost a decade. So it all depends on how the growth builds up, and particularly the next 4 quarters will be very surprising for a lot of successful companies, where the size of the win would be very, very disproportionate. So one has to keep the ears close to what the companies they say in their con call, in the quarterlies, and that's where I think you'll build up the expectations. I would not be bearish on any of the larger successful companies who have delivered very well in this quarter.
Okay, Raamdeo, it's always a pleasure speaking with you. Always something to learn, and the fact that you yourself are such a keen learner. Listen very closely to the conference call of companies and then pick up your ideas from there. Thank you very much for joining us. We have to take a break. Okay, it was a earnings call, so we should do the financials of Motilal Oswal as well. The past 3 years, this is how they looked. We are starting with revenue. Okay, it's steady as she goes, and then you'll get the EBITDA and the profit. Okay, that's profit. So then you have net worth, is it? Okay.
Oh, net worth has gone up quite a bit.
Some individual stocks. The disappointment of yesterday is continuing to linger on in United States.